So one Wall Street analyst thinks that DraftKings has some 42% upside, and that would put the stock at roughly $60. But if you look at Cathie Woods' holding of DraftKings, she's been selling the stock off ever since 2022 when price was at $15, which is kind of odd because when price is this low, she usually signals a discount. Nevertheless, in recent weeks, her sell-off of DraftKings has only accelerated. Now, if we look at the monthly chart, again, she started selling since the stock was at $15. That would have put price in 2022 near this double bottom. And since then, it's been off to the races. It did form a daily bias level. It did reach a support resistance band, only to retest it and then move higher. And now price has reached the finish line in the form of this monthly sellers level at $48. That was formed from this drop in price, base and candle, and then the drop all the way down to $11. When you look at things on the weekly chart, now what one can see, this is my target on the pullback at least, and I'm going to take this off here because I want to show you this rally base rally taking out the pivot high to the left. So we call that weekly buyers. Now think about this level of interest is that it's close to this monthly sell zone. Typically what you really want to happen is that you want to see price take out the zone before it pulls back to this level. Right? The fact that price could not surge higher tells me that the sellers are in control. So this zone may or may not hold. Price may react, but then price may just close below it. Now scrolling back out to the monthly chart, we were talking about down at 11, we're at a discount. Up at 48, you're at retail prices. And so this is also known as a distribution phase. And so we could see price pull all the way back down to 32.50 and catch up with the 13 simple monthly moving average. Now before we go down to the daily chart, let's quickly look at what this analyst at Wall Street is saying. So he goes by the name of Ben Miller, and his team started the company with a buy rating and a price target at $60 per share. Now that premium to the recent stock price is similar to the growth that DraftKings expects this year compared to last year. Miller is confident that the company can maintain revenue growth of at least 20% annually as online gaming gets more popular and gains regulatory approval in more states. But DraftKings is already trading at a relatively high valuation multiple. The company isn't yet profitable, and its price to sales ratio is high at about 5.5. This compares to only 1 for your traditional casino operators. But typically, if you are a growth company in a growth sector, you can command a higher premium or higher valuation. That said, DraftKings is growing at a faster rate than traditional casinos, and the ultimate size of its addressable market could continue to expand if more states legalize online betting. That makes Ben Miller's view look more reasonable. Now going down to the daily chart. This was that zone that we looked at on the weekly chart, and I don't love the price action, right? It's a lot of trading here. So we could see price just slice through it like a hot knife going through butter. One thing to note, you do have this 200-day moving average sitting at around $35, and that could serve as dynamic support if price just breezes through this weekly buy zone, but only time will tell. I would say Cathie has the right idea, selling at the top, but there was no way she should have sold down at $15. Thanks for watching. Subscribe. Please like the video.